When is the best time to invest in crypto? The answer to this frequently asked question is simple yet deceptive. Several crypto analysts have tried to time the market, but encountered extreme difficulties. Hence, there is no best time to invest. However, there is a time-tested strategy that can help in making investment decisions. According to Bitboy Crypto, this strategy has worked out for many, thus emphasizing its essence for Cardano ADA holders. Cardano ADA has been adversely affected by the most recent crypto crash, so the question is, will this strategy calm the fears of Cardano investors? Cryptocurrency is a new industry. We don't know if the technology will deliver on its promise, and if it eventually does, we can't be certain about which currencies will come out on top. This underscores the importance of making research, as it helps you avoid scams and badly managed business. If you are investing for the long term, research can give you the confidence to survive through the dips. Cardano has a lot going for it. It has a strong team and a detailed technical proposal, but it has developed more slowly than other cryptocurrencies. To hold on to Cardano, you need to be comfortable with its slow and steady approach. As you learn more about Cardano and its breathtaking blockchain technology, it is easy to get excited and decide to go all in. But cryptocurrencies are volatile and a risky investment. Even if you're buying a coin like Cardano with solid and outstanding fundamentals, you can still lose your hard-earned cash. However, the famous YouTube crypto influencer Bitboy Crypto has attested to the profound value of an investment strategy. This strategy is known as dollar cost averaging. Dollar cost averaging refers to the pound cost average in the UK, which is a strategy in which investment positions are built by investing equal sums of money at regular intervals, regardless of the asset's price or what is going on in the financial markets. These regular investments could be in terms of fixed amounts of currency or a fixed number of shares. The intervals can be weekly, monthly, or yearly, depending on whenever suits an individual's plan. This strategy is a good way to develop a disciplined investing habit, be more efficient in how you invest, and potentially reduce your stress level. For example, you invest $100 every month, and when the market is up, your $100 will buy fewer shares, but when it is down, your money will buy more. Over time, this strategy could lower your average cost per share, compared to what you would have paid if you bought your shares at once when they're more expansive than the average. Like most investment strategies, dollar cost averaging is not for everyone, and there are certain times when it works better than others, but it can be a powerful tool in removing some of the emotional barriers tied to investing. By committing to a schedule, you don't have to worry about whether a stock or cryptocurrency is about to move higher or lower. Generally, dollar cost averaging works best in bear markets and with cryptocurrencies that have dynamic price swings up and down. Also, dollar cost averaging is not tied to hindsight. It is easy to doubt yourself if you spend too much time looking backward. If a currency goes straight up from your starting point, obviously it would have been better to buy on day one. But the whole idea behind this strategy is that we have no way of knowing how a stock or crypto is going to move. Well, your crystal ball might be helpful, but for some investors, dollar cost averaging is a better strategy than try to time the market. An opposing strategy to dollar cost averaging is trying to time the market. Once again, timing the market is an investment strategy mostly used by investors who attempt to beat the market by predicting its performance. No doubt, it's an active strategy that focuses on the short term and requires close attention and monitoring of the market, but it does not work all the time. Some investors choose this approach because if they get the timing right, they can generate above average returns. However, a perfect prediction of the market continuously is impossible. If there was a magical formula for determining the accurate day each month to buy a stock or cryptocurrencies, we would all just buy them and not figure out other strategies. The benefit of dollar cost averaging is that by breaking the investment into pieces, you can avoid worrying about when to buy in or timing the market. Therefore, it is important for you to note that once you pick a date, you stick to it no matter what happens. Furthermore, the ability to manage one's emotions while making rational decisions is a key trait for successful investors. However, controlling one's emotions is extremely difficult to do, especially for Cardano investors who are annoyed with its slow pace and price dumps. This is why investors with a long-term view opt for dollar cost averaging to help manage risk and remove emotions from undermining their portfolios. From an emotional perspective, dollar cost averaging keeps things simple. As long as you have the discipline to stick to it, you will be less emotionally affected by the wild ride and volatility of the market. Most new investors do not have large sums to invest and are not always aware of where to begin. DCA, or dollar cost averaging for short, is the ideal strategy for new investors looking to build a long-term portfolio. But this strategy does not spare you the work of choosing a suitable asset or cryptocurrency to invest in. Simply put, dollar cost averaging into a bad investment is still a bad investment, hence emphasizing the importance of playing your part in doing research before diving in. The fear of investing at the wrong time and the fear of missing out are real concerns in crypto. This is why the technique of dollar cost averaging was introduced. Cryptocurrencies like Cardano ADA have the potential of surviving over a long period of time, thus making the strategy thrive with them. In the short term, you don't want to be stranded and unable to pay your rent because the price of Cardano fell. The cryptocurrency market has built an incredible head of steam since the beginning of the year. Though the market is booming, investors remain skeptical about its long-term value. FOMO has rushed people into bad trades in crypto without genuine value. However, amid this situation, Cardano is a digital asset with plenty of use cases and a long-term strategy. The ADA coin will be around for many years to come, so Cardano's investment is worth the dollar cost averaging technique. The cynics believe that it may take several years for Cardano's benefits to justify the ADA token price. The network offers plenty of benefits to its users and has real-world value, making it a strong long-term bet. To some investors, Cardano appears to be a high-risk proposition and does not have the same track record as many industry stalwarts such as Ethereum. Nonetheless, it does have its strengths and several projects which could pay a lot of dividends down the road. Cardano ADA's bull case will continue to improve over time. For example, Cardano's Vassal update is expected to be a bullish event, despite the macro fears which are strongly countering the upside bias. The Cardano founder, Charles Hoskinson, blamed macro factors for ADA's underperformance, despite the euphoria about the Vassal update. He noted that the crypto market as a whole is disconnected from reality. The Federal Reserve has increased benchmark interest rates by another 0.75%. Overall, the US Central Bank is looking to raise the rate to 3.75% to 4% by the end of the year. A high rate environment could hurt Cardano and other top crypto assets, given it will likely increase the appeal of cash-based instruments among investors. But with the dollar cost averaging strategy, investors' worries and rash actions would be limited. Since investors are regularly making investments, no matter what the market conditions are, emotions are eliminated from the decision-making process. Yes, the Fed will make the market experience a downswing, but with this approach, it can be seen as an opportunity to buy at low prices, keeping in mind that the strategy is typically used for long-term investment horizons. Also, dollar cost averaging with Cardano helps ensure that you will be at the door when certain opportunities come knocking. Recent events offer an example to reveal why a steady investment strategy is so important. For example, if you stopped investing leading up to the 2016 US election results when uncertainty drove markets downwards, you may have regretted your decision in the days that follow, when the market surged to record highs. So, dollar cost averaging with Cardano ADA is just like using a steady investment strategy for a slow and steady coin. Just so you know, the investment strategy introduced in this video will save you from all the throbbing headache which comes whenever you are scrolling through the feed about Cardano. But of course, what are your thoughts on this? Let us know in the comment section below. We'll see you in the next video. But before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe notification buttons.